This is the Washtenaw County market report for November. And looking at the numbers that we have the first couple weeks of November, but really focusing on October sales and looking at September, we were surprised at the strength of the market. The number of new contracts written for homes was up in October, just as it was up in September. And by say up more than we had expected, and up over last year as well. So one of the questions that we've had throughout the year is just how much of this pent-up buyer demand has been released in the marketplace. Where does it stand? And if you look historically at numbers, from 2002 to 2006, the number of homes sold in Washtenaw County was significantly ahead of the historical norm, normal year, normal economic times. And then from 2007 to 2011, it was significantly below. So we looked at those two numbers and sort of added them up. And when you do that, the downs, the negative drop in the market, still exceeds the up that we occurred before the drop. So what that tells us is there's probably a little bit of extra demand still left to be released in the market, and we probably saw that in October and in September. But it's diminishing, and a lot of it has been released. So although we're optimistic that some of that's left to be released this year coming up in 15, and probably even into 16 and 17 to a certain degree. So that bodes well for overall where the direction of the market is. Our concern in general, though, is once that is completely out of the market, we're back to sort of normal. Is the economy strong enough? Are incomes rising fast enough to drive the real estate market and drive appreciation rates up to where they've been historically, which is probably for Washtenaw 6 to 7% range over the years. Now, for the last few years, that appreciation rate has jumped extremes. It's gone down as low as to more than 20% and up more than 20%. So it's jumped in our recovery. It's gone way down and way up. And now we're back to settling into what we're seeing more normal. So we're seeing that it looks like for the last at least 90 days or so, we're starting to settle into that 5 to 6% appreciation rate, which is much more normal. Some of the things that we're also seeing and that sellers should be aware of is that although buyer demand is strong, we're seeing a number of new listings coming onto the market. So listing inventory is starting to rise again. So what that means is that sellers, although there are buyers in the market, although the market is stronger from a historical standpoint, sellers are going to feel like the market is slowing down quite a bit, both because of the time of year. The market does settle a little bit in the winter, but also because those buyers are spread out over more listings. In other words, the listing inventory has grown faster than the new buyers entering the market. And that's particularly true in the over $500,000 market. Last year at this time, if you look at September and October stats, the average property over $500,000 had about 3.5 showings per month. Now that's down to about 2.5 showings per month. And actually, if you go over $800,000 for Washtenaw County, it's under 2 showings per month. This is not per week, this is per month. So that upper end market has settled, but really across the board, all price ranges, we're seeing the same thing. We're seeing, again, although there's still strong buyers in the market, they're being spread over more listings, so there's more competition in the market. Hence, values, instead of being crazy appreciation rates, they're settling down more to the 5 or 6% range. And sellers need to get more comfortable going into the winter that, again, it's showings per month and week and not per day. And offers will be not quite as plentiful, but not necessarily crazy compared to historical standards. Again, remember, we're coming off of 2 years of really crazy market activity, so we're just settling down a little bit to what's normal. And also, I don't think we could have a harsher winter coming up than we had last year. So we know that this winter, January, February, March, will not be any worse, and probably odds are much better than last winter when we had that pullback of business. So going into December and into the first of the year, we're pretty optimistic that we've got some pretty good market momentum. Again, slowing from crazy times, but still very good for the market. That's all.